So way back in 2010, at the behest of IFC, which is International Finance Corporation, a new company was born called Aadhar Housing Finance with the purpose of catering to the low income segment of the society. So that's how IFC joined the bandwagon. They took about 20% stake in the company, and the promoter group took about 80% stake in the company. That's how the journey started. Now, given this background of IFC and the purpose of the company, we were for the first 5 years mandated to start and operate business only in the low income states of the country. Hence, our birth state became Uttar Pradesh, followed by Jharkhand, Bihar, Odisha, Chhattisgarh, and West Bengal. So that's how we operated in the first 5 years. And once we were close to the 5-year journey, that's when we started expanding to larger states of the country. And in about 2016 mid, we were available in all possible states of the country, barring South. We did not venture out in South.
And why is that?
Because within the group, there was a second housing finance company called DHFL Housing Finance, which was operating in the southern market. And in early 2017, both these companies merged together. And in the mid of 2017, we became a pan-India player. So that's how the journey started. Then came a very important milestone in the journey of the company, which was post September 18 ILFS DHFL fiasco. The company was put up for sale. And the process started about October, November 2018. And in June 2019, Blackstone Group acquired 100% stake of the company. That's how today Blackstone is about 98.7% stakeholder in the company. 1.8% is held by ICICI Bank.
Okay. So what's Blackstone's plan, right? I think the big concern in the street is private equity players do not stay on with a company to perpetuity. They have a fund life, they need to exit. So currently Blackstone has a 98.7% stake.
That's
Post
right.
the offer for sale, it'll come down by approximately 15%. What thereafter?
Okay, I think you rightly said that when it is private equities, the fund life is not perpetual. The fund life for Blackstone investment stands at about 2030. And the way we look at it with the current offer on sale, as you said, about 15% is going to be off the charts. And the moment it comes to close to 50%, that's when we would need a lot of regulatory approvals and banking approvals. Since the fund life is till 2030, we don't see our current promoters in a hurry to go out in the market every 6 months or every 7 months. So that's how the plan is.
Okay. But is there any precedence in India or globally about a single largest private equity owner of a financial services company who's had to exit? We have PE players in many of the housing finance companies, but it's more, segregated, right? It's not one single, large shareholder. So, just give us some guide plan, because the worry is that, these PE guys will keep coming and selling shares in the market, putting a lid to the stock price gains.
So while you're asking that question, I am just scanning through the housing finance companies, and you're right, none of the housing finance companies has as large a shareholders as us. We have Blackstone, holding about 98.7% shares. While there are examples of multiple private equities shareholding in multiple in single companies. So yes, but there is no precedence of one single large shareholder as you indicated. And since there is no precedence of the primary, there is no precedence of the secondary in how will they exit. And as far as your concern around, they coming back to the market every 6 months, as I indicated, the fund life is till 2030. Eventually till 2030, they will have to exit. That's how it works.